Morning, Chris. How you doing?
Hey, good morning, Brian. I'm good. How's it going there?
It's good. This is Brian Jones. I'm here with professional trader Chris Hood, world's most interesting man. What's going on?
World's
What's
most
going up in
locked up
Canada?
man.
How's Canada?
Canada's cold. I'm looking at about a foot of snow outside my window. Thank God I don't have to go and shovel. Our neighbors are moving today. So there's this dude who's walking out of his house. I think it's like minus 500, normal, summer temperatures.
Yeah.
And he's walking in and out of his house in short pants and a t-shirt. And I'm like, I'm sitting in here. We got the internal heaters on. I've got my robe, but you can't trade without a robe, right? And this guy, I'm like, well, how is he doing this? I mean, you got to be built for this weather. I'm not built for it at all.
You need a robe and like a martini, at 8 o'clock, 8:30,
My
9.
wife, my wife always laughs at me because I find sometimes sitting in a dressing robe is actually pretty comfortable. You don't have to wear a poncho or something. She says, imagine if people actually saw what you wore, while you're trading. I'm like, look, at the end of the day, I don't have a boss to tell me what to wear. So,
So
it's
like,
like, I
yeah,
promise people that I have got pants on. Okay, I'm just making sure people know, right?
we'll set this up so that you've got your robe on, and then it's, of course, it's like, hey, we're talking before the market opens to say 8:30, and just randomly like figure out who you want to do it. You're like, I need another drink, and you just snap your fingers, and one like a hand comes in and gives you another Bloody Mary.
Oh, yeah, there we go, shaking them up. Yeah,
You just hear it, and then one slides into the screen. You're like, oh, thank you.
well, to be honest, during a week like we've had, or last 2 weeks where we've had this constant beating up, I mean, you really have had to have a martini midday just to deal with the emotional up and down. I mean, it has been pretty rough. I mean, I think Father Christmas has got COVID. He's under isolation and lockdown. He's basically sent out his belligerent elves to deliver coal to a lot of people. So, I'm waiting for my delivery of a lump of coal. Actually, though, I stand corrected. I think today we've got, I mentioned this yesterday in the webinar that we were doing. There are lights on the horizon. And, oftentimes we get sucked up into the emotion of recency, right? We have 5 red days in a row and everyone thinks the world can't get any worse, and they start bailing and, getting out and killing themselves. I mean, literally, there's an element of emotional control that's required in trading. And without that emotional control, you land up sabotaging yourself pretty dangerously. You take losses when you shouldn't take losses. There's nothing more terrible than the regret of an action taken the day before, when you could have actually just held back on and watched a movie on Netflix and looked at things in a different light the next day, right? So
That one day, that one bounce we had last week, where I
yeah.
had a bunch of profitable positions. I want to punch myself in the face for not getting out of some of my positions.
Well, you did. I think I wrote this in an email to subscribers where I said, look, we're getting this really nice bounce. Today is the day you either exit your trades or you start putting insurance onto your positions, because this is not going to be sustainable.
Yeah.
And we were looking at the indicators and the underlying internals of the market, and we could see that these things were, it wasn't going to happen the way that we thought it was going to happen. The problem with retail guys, or the problem with traders in general, okay, the more experience you have, the easier it is for you to deal with bad days. When you're new, and if you started trading anytime in the last maybe 5 or 6 years, you haven't really been through a long cycle, right? So, the bad times haven't been that much, and this is where the difficulty comes in for a lot of people, is that they experience a sustained period of good news or easy trades. Let's call them easy trades. And you start to think, your DNA starts to sit there going, this is the way it works. And when things start to change, or when you start to see cracks, or when cracks start to appear, you don't recognize them because you're not looking for them. You're looking for the consistency signals, right? You're looking for things that are telling you that everything's the same. So you have this confirmation bias. You only look for information to confirm what you already believe is to be the truth, right? When those signals start to appear, if you don't act on them, your strategy can wipe out all the profits you made before, you lose, and now you have to rebuild again. Happens every single year we see it. It's the most common problem, where people tend to think that, oh, for example, strategy A has worked for the last 2 years. Why wouldn't it continue to work? Well, sometimes the market starts to change. And if you throw a square peg strategy into a round hole market, you're going to have a problem. So your tools need to change. You have to constantly adapt. And this is where a lot of traders tend to fall over, is that they're not adaptable. So they keep doing the same thing. Markets changed, same thing doesn't work anymore. They don't recognize it doesn't work until their account is blown up. So, you want to learn the skill sets required to avoid these kind of issues. And a lot of it comes down to your toolkit, how you prepare your information, what do you look at, how do you look at it, how you process it, how do you get to the conclusions that you want to get to. And those are tough things. That's just experience. It's not something you can read out of a book. You've got to find how you think. So
you were saying you basically have two options. If you have a limited tool set, is either A, only trade when that tool set's valid, or B, learn some new tools.
Pretty much. You can't look at it in the sense of, when I started learning trading and I was reading every single book that was available, the problem that comes in is that books tend to be static. I've never seen a book that's dynamic, right? It looks at data that's often historically valid, but no longer recently relevant, right? It's, in 2008, this happened. Okay, cool. But it's now 2022 or 2021. And, is it still valid? Is the market different now? The setups that worked 10 years ago do not work today. Stocks have personalities, and sometimes stocks become schizophrenic. They were normal, and then they had a head injury or something, and now they're different. You have to appreciate that. And as traders, we tend to be, it's almost the same as like religious fanaticism. Sometimes traders can be religiously fanatical because what they do is they say, well, my setup is the only one that works. And that setup is valid for them, for that trader, with their circumstances, with their risk profile, with their psychology. And it might be different for someone else. So if someone else comes in and reads this trader going, oh, well, look at me, look how great I am. And they go, well, I'm going to try and copy him, but they don't have the same mental makeup, the results are going to be different. And it's not just a matter of copy the trade. That to me is a failed notion, because your timing will be off. Your broker might be giving you different spreads. You might land up paying a different price. So you have to have a toolkit that guides you to your understanding of what the market is and helps you trade properly. So these are the tools that we build. And, those tools help people plan. They help people trade. They help them stay calm in moments of volatility. So, everyone who panicked yesterday, they're going to miss the bounce today. There's already a bounce. So I'm going to share my screen and we can have a look at the futures for a little bit. We can see that the market looks like it's going to open up positively. Okay, not very big. I mean, it was bigger earlier this morning, but it's still big nonetheless. So you got out yesterday on, there's an expression we have where we tend to do the wrong thing at the wrong time. When you capitulate, when, I said it yesterday as well, when you're in jiu-jitsu and someone's got a choke on you, there's that point where the choke is there, your eyes have rolled back, you've started to snore. Okay, you tap. It's that point, right? Everyone has that point. It's not the same depending on, everyone has a different, snore point, we'd call it. You've just got to work out that when you're snoring in a trade, sometimes it might be just, wait just a little bit longer. You might want to give up a little bit longer, and then you get the sort of bounce. So understanding the market, understanding the internals, understanding the trends, what's changed. Don't throw the same strategy into a changing market. It's not going to work. So we are where we are. Santa Claus might be coming. Like, we don't know. I think his elves are now on the sleigh. They've kicked out the renegades.
And I would I would be happy with just a flyover. You know what I mean? The sleigh just did a flyover. Well, some of my positions up to where, I could either get out at a minimal profit or whatever.
Here's the, the getting out part is hard, because when you have a trade, let's say you're in a long call option that's down 30%, and you've got 30 days to go and the market starts to turn, you've got to be really conscious about the fact that you can still be 100% right, okay, in terms of price, direction, everything, but you were in the wrong vehicle, right? So sometimes those long duration or those long calls that you've got that are expiring within the next month, sometimes they are almost like self-sabotage tools, right? That, you know, you have it.
None of my trades have less than like 87 days.
Yeah, look, 87 days. I mean, that's a lifetime in our world.
Yeah.
You know, a lot can change. But, you know, if you've got something that's got 30 days left now, you're 1 to 2 strikes out of the money. The choices that you have are you either hold on to the trade and hope for the best. Not the best strategy, because 2-3 days in a row of downturn price action, that trade is dead. You may have probably paid too much on the way in, having bought it during a rising market, so you might have overpaid. So your break even is never going to get achieved, so you can only really lose 100%. And it's this kind of thinking that you have to have in order to understand that, look, if I've got a long call and it's expiring in 30 days and the market's now moving up, give yourself a better opportunity to make back the small loss you can take on that trade now by rolling the trade out an extra 30 to 40 days. Those types of strategies or those types of actions often sound quite counterintuitive at the beginning, because you go there and you say, oh, but I'm going to take a loss. I'm going to lose $300 on this trade. But the point is, you want to give yourself an opportunity to make back the 300 plus a profit on that secondary trade. So when we trade, or what I try and teach my clients, is more around scale your way into trades. If you've got volatility in the markets, and our indicators will tell us what the state is, you never want to overpay upfront. You never want to go into a trade by spending too much money. Okay, so you've got to be very conscious about the extrinsic value of your options. What are you paying for time and volatility on a long call? If you overpay that and the market just stays flat, all right, remember, your extrinsic value will go to zero by the end of that contract. That's what it's designed to do. So if you've overpaid for an at-the-money option, where 60 to 70% of the premium you paid was extrinsic value, so let's say you were doing a sort of 55 delta long call, and the market stays flat, you've just lost 50%, even if the price of the stock doesn't move. So it comes down to building the story. And if you don't have a story for a trade, if you just see a trade as an action, I'm just going to buy this call option and, you know, hope for the best, then you will lose. There's no doubt in my mind that the probability of you losing is very high in that case. So really important to build stories around trades. What are you trying to do? How are you going to do it? What are your expectations? And when those expectations get broken, that's when you get out of the trade. You know, no longer are those expectations being met. I'm going to move on now and do something else. And also knowing, you know, what your probability of winning is. You know, if you're starting to build a story that's only got a 1% chance of winning, it doesn't matter how good your story is, it's not going to happen. So you've got to know that as well. And this is something that we've been building for a while. You know, when you start looking at trades, you've really got to understand what the historical probability of those signals that you're trading off are winning, right? So here we're looking at XLP. XLP is a very strong sector at the moment, right? So you want to be looking at, you know, if we look at the individual sectors, XLP, there it is over here, you can see double green. It's a double green, and it's got a long squeeze in the weekly that's already fired long. It's below the 8, so short-term momentum for us is a little bit suspicious, but we've still got medium-term momentum intact, right? So we can do a trade. It's got to be far out. We can't do the short-range trade. We have to go far out in the trade. So when you look at XLP now on your graphs, we can see that we triggered a squeeze signal. So we have a number of tools available to ourselves. In our squeeze tool, we have around 6 squeeze indicators that we use to plan trades. And what we look at is the squeeze a valid signal? Yes. On that signal here, we have a 60% win rate, 3.5 times profit factor over the last 2 years. So we know it doesn't generate a lot of signals. So on the weekly chart, we've got 1, 2, and 3 valid buying signals, all different strategies, So one is based on our squeeze indicator. So we've got 6 indicators that sit inside our squeeze bundle. We've got a moving average bundle as well that sits here on the green strategy entry signal as well. And that's our reversal indicator. So in this cluster of signals, you know that you can go long in XLP because we've got confluence of signals. Remember, if a lot of these indicators are looking at the same stock from multiple angles and coming to the same conclusion, you have a higher probability of putting together a winning trade. So from here, you'd be trading. But what we'd like to use is our day chart for the bulk of our trading, because we're not going to be exiting on the weekly chart. We're going to be exiting on the daily chart. So here on our daily chart, using a slightly different setup on the squeeze, we've got a higher win rate with a lower profit factor. However, we got an exit signal yesterday because it triggered our ATR trailing stop. Okay, so my squeeze indicator here exited there. So that was a profitable trade, but I've got a reversal signal that's in play as well. So I can trade the reversal signal. So if we switch this and we move over to our other planning tool, now from here, I can start adjusting my strategy and I can go, okay, I'm going to use the reversal on the 914.21. I'm going to adjust my ATR baseline to make it 2. And I want to just see if this number starts to adjust. So we went, you see what happened? I altered my volatility band that I wanted to sit with in the trade. And now I've got a 90% win rate with an 8 profit factor on XLP, right? So on the strategy, we also had an exit signal yesterday when it hit our trailing stop. So what am I trading now on XLP? I've got some trades that are sitting here based on this weekly chart, okay, because I'm holding on for the major trend because of the inflation story. But our daily chart trades are already out and we're already profitable. So now I'm waiting for another entry strategy, another label to come in and tell me I can get back into XLP and I can start adding to the trade. So we can easily now add alerts. We can now put a little alert on here to tell us, look, when this sends a signal that tells us that this is now setting up for that trade again, it would send us a message. We will then go in and trade. And this is the importance of planning. All right, we are doing an XLP trade because of the inflation story. And because XLP is one of the best sectors at the moment. It's a double green. We've got double green, and you can also see it trading inside this green wave, right? When we have a gray wave, we don't want to be trading it. When it's a green wave, we want to trade it. So different ways to build your stories, but it's important to have tools that tell you, look, when this happens, you've got to go and do a trade. Okay, if it's not happening, just don't do the trade until the system tells you to do it. So just a couple of things that we do that make trades easier to create success out of, right? You want tools that will help you, so.
So would you talk a little bit about how trading commodities is different than equities? Like if you're looking at the futures.
Oh yeah, sure. So when we look at commodities, let's take corn, for example. So remember the time frames that these trade on, right? So futures trade on a much longer time frame than the cash market, right? So these trade 24/7 or 25, 24/5, I think it is. They don't trade on the weekends, right? So here you've got a far higher degree of price action, right? It's much easier to determine price action out of the futures. What happens here is the futures on this left side drive the price of the ETF in the cash market. So looking only at the ETF, you really want to look at the futures to understand the broader price action that's underway rather than just looking at the ETF. So here, I don't have any data here on the futures side for my squeeze bundle, but I can look at my squeeze bundle here on the ETF to set my strategy while looking here at my futures chart. So what I'd be doing is saying, look, I'm looking for corn to break above this red line and hit this black line. That's what we look for, right? So we're looking for corn to get up to around 62.84. I'm looking for corn here to break through this area of resistance and head back up here to 23. That's the plan that we have in play. This is not going to get to 23 unless this starts to move to 63. Okay, so you have to watch these things and synchronize. I'm looking here at my squeeze. I've got buy signals happening here. All right, so with these buy signals, and I've got the squeeze forming on this side, I can start adding to my ETF position on the back of the signals I'm receiving here on the futures. So you can do this with oil, you can do it with gold, you can do it with corn, you can do it with soybeans. You should be doing it whenever you're trading a commodity or anything that is traded on the futures side. You should, and you're trading the ETF equivalent, you should be watching them in concert. So SPY, you should be trading with the ES1 futures. NASDAQ, you should be looking at the NQ. All of those things make your signals a lot more valid, right? So when I get a signal here on my futures chart, I will immediately go and trade on the cash market. I will just swap it over, right? I don't want to trade the futures. It's expensive. The margin requirements can be quite high. And also here in Canada, you know, my broker doesn't allow us to trade futures. So I'm always going to be using the ETF to be a proxy for the futures. So it's a little more complicated, but you know, it's completely doable as long as you've got the tools in place. So you'll see that my screen setup is almost exactly the same. I've got the same indicators. I've got everything's the same. So what I'm looking for are changes in the futures market to be applied on entries into the ETF. So very, very easy to do.
So anything you're looking at this week in particular?
I'm looking for a sleigh to just fly over my house. To be honest, I think that we need to get through the last couple of days of damage. There was a lot of technical damage that was done to a lot of the sectors, right? So if you look here, short-term momentum has been lost on pretty much everything, right? There's only a few areas of opportunity, the dollar and healthcare, together with staples, right? So healthcare generally does well at this time of the year anyway. And I think with this whole Omicron thing, you know, pharmaceuticals, biotech, healthcare are probably going to do a lot better over this time. You know, my philosophy is pretty simple. You know, focus on the areas where you've got relative strength. Look for opportunities where you've got momentum in both directions. So you want it in the short term and the medium term. So, you know, you only really want to be looking at healthcare and the dollar, to be honest, together with, yeah, healthcare, staples, and the dollar would be the three that I would look at. Where are potential opportunities? So let's have a look at potential opportunities, or where you see green and yellow, right? So here you've got corn. Obviously, we've got a trade in corn, even though we are below the 8. I think the longer term inflationary story around commodities is a lot stronger now, considering where the Fed was positioning inflation. You've just got to watch where we get this relative improvement, right? What we're looking for is a reduction in the reds and an increase in the yellows. Sometimes, even though you've got a red yellow, you can still trade these areas, right? So if you start looking at XLK, you know, XLK is a double yellow. If we go into our tool and we open up XLK, what you'll see is, here's the setup. I'm just going to switch this around. I'm going to start it from scratch so we can build it. I'll show you how we build it. From here, we can see a couple of things. So our squeeze bundle base trade setup has already given us an exit signal. This was 57% profitable, 1.7 profit factor. So it's a reasonable setup, right, on the base side. So that's just a sort of base template that I like to use for my trades. We've got a mid-level squeeze compression forming. What we want to do now is just look at our actual setup that we've got here. So I like to trade the reversal as a base standard. So this is not a standard reversal. This is a reversal based on both candlesticks as well as moving averages. And from here, we can also do adjustments. I can start adjusting this a little bit. So if we move our baseline to 2, keep your eye, let me switch this around. So keep your eye at the bottom, right? 77% win rate with a 4.8 profit factor, 9 trades over a period of 2 years, right? So we know that this signal does not trigger very often. Last time it triggered was back here in November. We've got a downturning squeeze signal. All right, this is the day chart that I'm on here at the moment. So what would I be looking for? I can still see that my trend on the shorter durations is a double green. My B score has dropped below 50. My volatility is increasing, and I've got a mid-level squeeze. So I really wouldn't want to be trading it just yet. I think that a squeeze, a signal will come soon. There's my gap open. So I'm going to open up a little bit higher. I'm looking for a close above this line here of 174. If we move up to 174, $7 away, the trend will shift. It will go from gray to green, which will give us an entry. So a couple of things that I'll be looking for here is, one, a signal on both the squeeze bundle. Okay, I like the squeeze signal, and I like the MA bundle as well, the reversal bundle. So looking for a trade here, just waiting patiently for it. We have our alerts set. You know, we'll get the gap up this morning. We want to see the break here. When we get the break above 174, there'll probably be a trade setup forming on XLK. XLV, we like this as well. We've got some trades here as well. You can look at CURE as well, CURE, which is the triple leverage. From here, looking at the day chart, we've been in this since the 10th. We've got a reasonable win rate here. It's not the best, and 1.5. So it's still a valid trade. We had a squeeze over here that allowed us to add more. So we've got opportunities in healthcare, XLP, XLV. The other ones that I'm looking at over the medium term, TMO. Let me open that one up. I have to update these today, so I'm going to be making some adjustments as well here. But TMO looks really good. You know, this is a relative outperformer within the healthcare space. So if we open up XLV, here's healthcare. You can see TMO over here, double green. It's got a high a squeeze that's forming here on the daily, and we've got a fully open entry strategy. So we can go in there. XLV itself is also long, but AbbVie is looking good. We made quite a bit of money on AbbVie over the last 2 weeks, and so on, right? So as you start building your story, this is the most important thing. It's build the story. Once you've identified the stock you're looking for, make sure that you've got triggers that you're looking for. So if you're triggering on a strategy, you can look to take the strategy, set your alerts, move from there. Once you've got the alerts in place, it's just a matter of patience. So you got to have the tools. And you know, if you're watching this, sorry, I can see my screen is flicking around. But if you're you know, interested in these, please get in touch with me. Go through to rogueinvesting.com/alpha. Check out our product. And you can get in touch with me if you're looking for you know, access to these indicators. They are premium indicators. They work really well, and they'll certainly help your trading you know, get better.
Agreed. Well, Chris, great talking to you this morning. We'll let you get going because I know your alerts are gonna go crazy, and you've got all looking for Santa this morning.
I'm gonna go stand outside in my short pants and see if that helps.
All right. Well, don't freeze to death.
I'll try not to, man. I'm becoming more and more Canadian. The more years I stay here, the more I appreciate the cold. So you take care, my friend. I'll see you next Tuesday.
Yep, absolutely. Take care, Chris.
Take care, everyone.